Our speaker is also here, Dr. C. Rakesh Gupta ji.
हाँ जी sir.
Can you hear me,
Bhaiya? Please, as I am hearing you. I think now it's already delayed. We must let the people in.
Let them in. Harshit, please let everyone in. आप unmute कर लो हर्षित अपने आप को ना.
I've let all the participants in.
हाँ.
Vimal sir, on behalf of the Dehradun ICI, I request you to please declare today's session open and welcome our speaker and all our guests for today, please.
Good evening, everyone. On behalf of the Dehradun Managing Committee of the Dehradun branch of the Institute of Chartered Accountants of India, I welcome our honorable speaker, Dr. C.A. Rakesh Gupta ji, who has very kindly spared his valuable time for the benefit of all of us to deliberate on a very important and a very contemporary topic, which is tax audit. So Dr. C.A. Rakesh Gupta is now no more just an individual, he is an institution by himself, I should say. Having a very accomplished academic career, he is a member of the Institute of Chartered Accountants of India. He is a member of the Institute of Company Secretaries of India. He is a member of the Institute of Cost and Works Accountants of India. He also holds a doctoral degree, so we very respectfully call him Dr. C.A. Rakesh Gupta. And he has been, I will say, a very inspiring professional. At a very young age of 37 years, he was appointed as a member of the Income Tax Appellate Tribunal. He was posted at the Hyderabad bench, where he served for some time. And thereafter, he resigned from the tribunal to take up his tax practice further. Today, I believe he is one of the most renowned tax practitioners of India. He practices in the Income Tax Appellate Tribunal, in the High Courts, and also in the Supreme Court. Specializes on the direct taxes, as we all know. His firm, RRA Tax India, is one of the leading tax consultancy and tax litigation firms of India. Despite having a very busy schedule, because I have personally worked with him over a few assignments, I know the type of schedule that he keeps. I must salute him for always being available at the request of professional bodies to enlighten them, to help them in updating their knowledge. So my request to him for deliberating on tax audits was immediately accepted by him, and he's there with us. I'll request CA Dr. Rakesh Gupta ji to please take over now and enlighten all of us. We are waiting to hear from you so that we are better equipped to complete the tax audit assignments, which is a very important assignment that we have to do as part of our professional duties, and we can do it with our best of our capabilities. Over to Dr. C. Rakesh Gupta ji. And for our members, I'll just have a request. While the deliberations are on, keep yourself on mute so that there is no disturbance. And if there is any question, then we can always take them up. You can put them in the chat box, or maybe once the deliberations are over and we have any questions, we can always, after the session, request our learned speaker to help us. So over to our learned speaker, Dr. C. Rakesh Gupta ji. Sir, you will have to unmute yourself, sir. I think you are on mute, sir.
Thank you, Vimalji, for having spoken.
Sir, namaskar. Atul Mehrotra.
Namaskar ji, Atul ji. Namaskar, Atul ji. So, Vice Chairman of Central India Regional Council, Shri Atul Mehrotra ji, Office Bearers, Chairman, Secretary, Treasurer, Convener of Dehradun branch. At the very outset, I must thank the branch for having invited me to be with all of you this afternoon to speak on the tax audit. Now, tax audit time is ripe because as of now, 31st October is the last date, unless, of course, it is extended. Therefore, we all are busy except me. Finalizing the tax audit. Now, before I speak on this topic of tax audit, I must start with a caveat. And that caveat is that I do not know much about the audit because, since last several years, that has not been my forte. Therefore, it may not be expected of me to speak on method of accounting or the standard auditing practices or the audit steps. Whatever little I know, I always say, I candidly confess, I know, the taxation aspect of this tax audit. And as usual, I do not know how many of you know, how many of you have heard me during this COVID period. I do not speak in the traditional manner to apprise my already well informed friends about the legal positions. I tend to take up certain issues, which have got some contentious aspects into them, and that is how I flashed certain issues to dear Vimal, and I have been told that these have been, sent to all of you. And of course, those issues have got bearing on the tax audit. It is not as if that they are in vacuum. It's not like this. So I will start this deliberations of tax audit from clause 36 capital A of the tax audit. A question may come as to how and why should I be beginning from a clause which is so at the fag end of this form 3CD. But then, though clause 36 capital A is at the end of form 36A, but then it deals with the clause or it deals with the section which is somewhere at the threshold of the Income Tax Act itself. And that is very dearly or popularly called as the provisions relating to the deemed dividend under section 2, clause 22, small e. Now, as all of us know, that clause 36 capital A of this form 3CD requires the tax auditor to report under that clause to compute the amount received, which qualifies to be called as dividend under section 2, clause 22, subclause small e, and the date of receipt. Now, before I come to the specifics of that clause, but one fundamental question, because I'll try to speak on the macro aspects also, and that is why to many of you who may like to hear about the micro and the nitty-gritties, may not appreciate the scope of by these deliberations, but then that is how, right from the beginning, I have clarified it. That those who are interested into the taxation aspects, taxation facets, the macro aspects, may like to or may enjoy this deliberations. So the very first macro question which comes is as to why this clause 36 capital A asking the tax auditors to give the amount of the deemed dividend, now if at all, is there in form 3CD. Now this issue I have raised with a particular purpose and a particular aspect in my mind, and which I am going to reveal. Now, this concept of the deemed dividend is applicable in case of a shareholder of a closely held company who has received either the loan or advance, and that shareholder is holding more than 10% shareholding, having the voting power. to the extent of the accumulated profits of the lending company and to some other concerns. But the question is, when, even if it is a dividend, now let us assume, now though somebody can say, but how can it be called dividend? Because it is nothing more than mere loan or advance. But then the legislature in its wisdom, the sovereign in its wisdom, and on the strength of the constitutional powers which are vested in the sovereign, has sought to enact this kind of the loan or advance to be in the nature of dividend. And that action of the sovereign has found acceptability from the highest court of the land, then no fault can be found on that aspect. But section 115 capital O is the section now which says that the dividend paid by a company is liable to dividend distribution tax. Now this dividend distribution tax now comes to be abolished from assessment year 2021-22. But so far as the present year is concerned, for which we all will be doing the tax audit, that is assessment year 2020-21. Now 115O now was very much there, or is very much there on the statute. And 115O was amended by Finance Act 2018 from 1/4/2018 to incorporate within its ambit even this deemed dividend of section 2, subsection 22 or clause 22 or subclause small e, meaning thereby that this deemed dividend was not to be taxed till assessment year 2020-21 in the hands of the shareholder. And the company now which has paid this amount to such shareholder now was required to pay dividend distribution tax, and that too at the rate of 30%, if you remember, from 1/4/2018 as per the amendment brought by the Finance Act. The dividend distribution tax in respect of such deemed dividend was made 30% as against 15% in respect of other dividend. So when this dividend or deemed dividend is not going to be taxed in the hands of the shareholder, then what purpose would it serve by asking from the tax auditor under clause 36A of the tax audit report that how much is the amount your assessee for whom you are doing audit has received the amount in the nature of deemed dividend? Because ultimately, even if you furnish this information, and obviously you will furnish, you are obliged to furnish because that is what the format requires you to report. But then, since the objective of the tax audit is to assist the tax authorities in determining the true tax liability of the auditee, and since the tax on the deemed dividend has been shifted from the recipient shareholder or from the shareholder to the lending company, and therefore to seek this kind of an information from the tax auditor as to how much your auditee has received the amount of deemed dividend, now is something now which defies logic. But then there may be another angle to it, and that another angle is that the tax department now would come to know, based upon the reporting to be made by the tax auditor, that your auditee has received this much of amount from some closely held company, I mean with which your auditee enjoys a special relationship, the shareholding relationship with that company, and therefore this information given by you as the tax auditor in the hands of the recipient may not be beneficial in the hands of the revenue or your assessing officer, but then this information is liable to be and is prone to be passed on to the assessing officer of that lending company, for that assessing officer to see whether the dividend distribution tax, that too at the rate of 30% on this much of amount of the so-called deemed dividend purportedly received by your auditee has been paid by that company or not. Because if you remember that under clause 31 also, which requires you to report as to how much amount your auditee has accepted as a loan or deposit, or the amount of loan or deposit which has been repaid. Now, the requirement which was inserted about 3 years back is that your auditee, how much amount has received of rupees 2 lakhs or more, otherwise than through banking mode, and which is hit by section 269 ST from a person in a day or in aggregate from a person, like all those kind of. So there also, as a tax auditor, you are required to report, even if your auditee may not have received, but then your auditee may have paid the amount, and which in the hands of the recipient of that amount may be hit by the violation of section 269 ST in the hands of the recipient. So the objective of this form 3CD is to garner, gather, collect informations may not be relevant for the purpose of your assessment, but then is relevant for the purpose of assessment of somebody else. And in that context, and to that extent, probably there seems to be the justification that despite the deemed dividend being made subject to dividend distribution tax in the hands of the lending company, and yet it is asking from the tax auditors to report as to how much amount of deemed dividend your auditee has received. Therefore, on the face of it, now it appears as if now this clause may not have any relevance, pertinence, or importance from the standpoint of your client, but then it has got relevance for the tax department so as to catch hold of the other end of that payment. Now, associated with this is the issue, and that issue is very important and which I have been highlighting as to how much difficult, if not impossible, is for the tax auditor to report, because this clause in any case will have a very direct tax bearing on your SSE from the next year when the dividend has been restored to be taxed in the hands of the shareholder. Therefore, I am raising this issue as to how much difficult, if not impossible, is for the tax auditor to report, the amount of deemed dividend. And this is for this reason, which I am going to narrate and explain. Because what is deemed dividend as per section 2 clause 22 small c? That any payment by a closely held company or a company in which public is not substantially interested by way of loan or advance to a shareholder holding more than 10% shares carrying voting rights with it to the extent of the accumulated profits of the lending company. This is one part. The second part is any payment made by a closely held company, that is the company in which public is not substantially interested, by way of loan or advance to any concern in which such shareholder who was holding more than 10% shareholding, carrying voting rights with it, has got substantial stakes or substantial interest in that concern to the extent of the accumulated profits of the lending company. Now, so far as the first limb is concerned, whereby your auditee being the direct shareholder holding more than 10% shareholding of a closely held company, receiving amount by way of loan or advance. Now, it may not be that difficult for you to know as to where your auditee is the shareholder in which closely held company and where you are holding more than 10% shares carrying voting rights. And in that situation, then the next course of action as an auditor for you is to see as to whether that lending company, as on the date of the grant of loan or advance to your auditee, was having accumulated profits or not. Because the position of the accumulated profit has to be seen as on the date of the grant of loan or advance. And then if there are several dates on which your auditee has received the loan or advance, then that amount which is deemed to be the dividend under section 2 clause 22 subclause small e then is to be notionally reduced from the amount of accumulated profit. Therefore, this exercise now will have to be done by the tax auditor as to your auditee being a shareholder in some closely held company holding more than 10% shares carrying voting rights, whether has raised any loan or advance from that company, and if yes, then how much is the amount, and how much is the amount of the accumulated profits as on that date. And to obtain the information from that lending company as to the availability of accumulated profits as on the date of the grant of loan or advance is not that easy task. It's not that easy task. Then the second limb, in which your auditee may not have raised the loan, may not have raised the advance from that closely held company, but then some other concern, that concern may be an HUF, that concern may be a partnership firm, or for that matter an LLP, or for that matter a company, in which your auditee holds not less than 20% stakes or 20% interest. Because if those concerns also may have raised the loan or advance from that lending company, then even that loan or advance not received by your auditee but received by other concerns would also constitute deemed dividend to the extent of the accumulated profits, but in the hands of your auditee. So your client may not have raised any loan or advance, but then some other concern in which he has got nearly 21% say interest have raised loan or advance, then even that loan or advance raised by that concern now would also become dividend in the hands of your client for whom you are doing audit, and that too with reference to the amount of accumulated profits of the lending company. So the determination of that accumulated profits in the hands of the lending company as on each date of loan or advance, that too given by the lending company, not to your client but then to some other concern, now that also becomes necessary for the tax auditor to determine, and then after finding it, then you'll have to report. So this is not that easy task. It's not very difficult to visualize that your client who may be having say 11% or 12% shareholding in some closely held company may not be in a position in certain situations to influence that lending company to part with the informations relating to the availability of the accumulated profits, and thereby may causing a great hardships for the tax auditors, to find out and to compute this amount of the so-called deemed dividend which is to be reported. The next issue, now which again I find is has got link with the tax audit, but then has got link with the assessments also, and that is there under clause 20 small a. This is the third issue, issue number 3. That can the commission paid by a closely held company to the working directors now be called as a subterfuge to pay dividend? Because now in case the company pays dividend to its shareholders, then it is called an appropriation. It is not a charge against the profits. Now company is made to pay dividend distribution tax on that dividend. So the question comes that if there are say 2 or 3 shareholders who are working directors, and this is very common because most of the times, we MSME, chartered accountants firms, happen to audit the closely held companies, the private limited companies, and where this kind of a structure, is very much in vogue. So there are 2 or 3 shareholders who are directors also. They are working, they are being paid remuneration, but then apart from remunerations, they are being paid as a bonus or commission also, over and above the remuneration. And insofar as that company is concerned, you are doing audit of that company, the company claims it as remuneration to the working directors. But then the assessing officer now seeks to apply, and that is what is there under clause 20 small a. Assessing officer now would seek to apply that had you not paid to these working directors anything as commission, then in any case that commission then would have partaken the character of the total profits of that company, I mean, which was or would have been available for the distribution of dividend. And therefore, the attempt of the revenue is to show that the so-called commission or the commission which you have purportedly claimed and paid to the working directors is nothing but payment in the garb and in the form of commission, which in any case would have been distributable to the shareholders by way of dividend. And thereby, it is a subterfuge or attempt to pay lesser tax or to avoid the tax in the form of the dividend non-payment of the dividend distribution tax. And clause 20 small a of this tax audit report, now it says any sum paid to an employee, and the directors can be, if they are working, then they are working as employee. Any sum paid to an employee as bonus or commission for the services rendered, of course, where such sum was otherwise payable to him as profits or dividend. So while doing audit, have we come across such kind of situations? At least I have seen several situations of this nature, where in the assessments, though as the auditor we have never found anything worth for the purpose of reporting, because as the tax auditor, now we do not find any reason to say that this commission, if had not been paid to the working directors, then it would have been paid to them as dividend as a shareholder. No, as that I am yet to see in my practice of 3.5 decades, I am yet to see any tax auditor reporting anything here. But then the purpose of today's deliberations is not to give my deliberations on those fixed line of the tax audit, but then to give a new dimension, a new standpoint. Now, as the tax auditor, whether I have seen it and the objective of my seeing now is emanating from this fact also, that most of the times that we are not only the tax auditors, but we are the tax consultants also. Therefore, at the stage of audit, whether I have assessed that श्याम सुंदर गुप्ता जी का माइक है, उसको ऑफ कर लें। श्याम सुंदर गुप्ता जी, श्याम सुंदर गुप्ता सर, माइक ऑफ कर लें सर अपना। यस, सो विमल जी, प्लीज एडवाइज हिम और अनम्यूट और म्यूट हिम।
Please, all the participants are requested to keep their audio in the mute mode only.
Okay. Now, so the objective is that in the capacity of the tax auditor also, you may not be reporting, but then whether you have assessed the risk which is embedded in the kind of arrangement which your company client, if at all, is holding this kind of a structure, is into it. So objective is this. Though as the tax auditor, of course, I mean, because I always say, I know, because I have been dragged. I mean, I have been dragged for and on behalf of my client, even till the stage of the highest court of the land, in respect of such kind of cases where that company unfortunately paid commission to the working directors who happen to be the shareholders in the ratio of their shareholding. And then it became one more strong ground for the assessing officer to say that it is a camouflaged payment of dividend, because had you not paid commission, then it would have been paid in any case out of the profits by way of dividend. Whereas now when the assessing officer, or for that matter the tax authorities, make such kind of contention, they disregard that corporate structure. I mean, that may not be permissible, and particularly in the absence of any general anti-avoidance rules as then, because they are of very recent origin. Therefore, this aspect needs to be taken care of by you as the tax auditor at the stage of the tax audit, so that there may not be any possibility of any litigations at later stage. The next issue, with which lots of SSCs are grappling and struggling because of the prima facie adjustments being made by CPC Bangalore on account of employees' contributions of the Provident Fund and the employees' state insurance contributions now having not been paid on or before 15th of the following month to which they pertained. Now, our Income Tax Act, as I said, that is full of fictions. But then those fictions, if they are built in the definition of income itself under the Income Tax Act, then the catastrophe, such kind of fictions do bring with them, now is anybody's guess. Section 2, clause 24 now defines income, and that too in an inclusive manner. It's not exhaustive. And clause 10, small Roman, was added by Finance Act 1987 with effect from 1/4/1988. Now it is there almost for 32 years. Now it says, and its constitutional validity has been upheld by the court, that the moment you deduct from your employees on account of either Provident Fund or ESI, or for that matter any other welfare fund, now that will constitute your income. That will become your income. Though, somebody can say that the moment you deduct something, how can that partake the character of income? But then, as I said, the sovereign, under its constitutional powers, under the sovereign powers, make such kind of a provisions, and such provisions, when upheld by the court, then obviously, sovereign can make anything, and by making and after making can get away by making. So it constitutes income. But then section 36, subsection 1, clause small Roman 5a, read with its explanation, say that we will allow you as a deduction. We will allow you as a deduction, provided you happen to pay on or before 15th, that is the date which has been so prescribed under the respective legislations, the Provident Fund and the ESI. And in case of the employer's contributions, the law is like this, that in case you do not so pay, but then you pay belatedly, then up to the due date of filing of return, that is all right, we will allow you. And even if you happen to pay after the due date of filing of return also, then it will be allowed to you on payment basis next year. But in case of employees' contributions, the law is very harsh. And this harshness is to this extent that in case you do not pay on or before the 15th of the following month, then this deduction is lost, and is not only lost, that is lost forever. The law is, though, is based on logic most of the times, but then such kind of a provision which has been made in a lopsided manner, defies logic. Therefore, whenever in the tax audit report, the tax auditors do report that the due date of these contributions to be paid to the account of the employee was 15th of May, 15th of June, 15th of July, so on and so forth. And when the actual date of payment is not 15th or prior, but then on 16th and thenceforward, then the CPC picks up the information from there and then make disalliance by way of adjustments under section 143(1). And that is how the lots of litigations have been unleashed by CPC by making such kind of adjustments. Now, if we read clause 20 small b of this form 3CD, then on the face of it, it requires that details of contributions received from employees for various funds as referred under section 36 on 5A, and then nature of fund, the amount receipt from employee, then the due date and the date of payment. But then the question comes as to what is the meaning of due date. Now, due date, if you go by the letters of law, because the due date has been defined under explanation to section 36 of section 1 clause 5 to mean the due date as prescribed under the respective legislations. Now, I remember that Honorable Delhi High Court, in the case of AMIL Limited, AIMIL Limited. But then even prior to that, I can say, that there are divided judicial opinion on this point, though the preponderance of the judicial opinion is in favor of the taxpayers, to the effect that even if these amounts stand paid on or before the due date of filing of return, then also no disallowance should be made. But then a couple of high courts are against this proposition. Then even the board's circular is very categorical in this terms that we will not allow you in case there is even a single day's delay. But then that is not the law. That may be law for the assessing officers, but then that is not binding on the appellate authorities. I remember that I had an occasion to argue the case of AMIL Limited before the Delhi High Court. It is reported in 321 ITR. I do remember vividly, and I recollected that the argument which was conveyed was that the moment I deduct it from the employees, then it becomes my obligations as an employer to pay it, and therefore it becomes my obligation, and therefore the time limit or the due date which is there under section 43B, now that should apply mutatis mutandis in respect of the employee's contributions also, because once I deduct, then I step into the shoes of the employee, and then that becomes the obligations of the employer, and therefore section 43B should govern. And that is how, and that is why my Lord Justice Sikri, as he then was, as presiding judge, now in para 8 has very categorically said that the due date for the purpose of section 3615A now means the due date of filing of return of income. Therefore, maybe as a tax auditor, you may not help much by not reporting under this clause 20 small b, because then we also tax auditors, as the tax auditors are quite vigilant and of course diligent enough to ensure that there should not be any finger which can be allowed to be raised against you. The tax department may not be after your blood. Then there is a regulatory agencies in the form of our institute's disciplinary committee. So because of so many factors, so according to me, now if you follow as the tax auditor also the dictum of law as understood by the courts, then no fault can be found at your door. But yesterday I was made available one decision from the disciplinary committee. The name of that case is Ishaq Ismail Lakkadghat. This is the name of chartered accountant versus income tax officer Mumbai. And after reading that decision of the disciplinary committee, I mean, with utmost respect, I mean, I was flabbergasted. Though the appellate tribunal, against the decision of the disciplinary committee, has sought to relax the tone, tenor, and texture of that order, and some dilution has crept, but then the disciplinary committee's order, which is being part of, which was being adjudicated by the appellate tribunal in that case, and that decision was rendered by the appellate tribunal in 2018. Justice MC Garg as the head of the appellate tribunal. Now, but then, I mean, you come to know about the mindset of the disciplinary committee. Now, in that case, what happened? The chartered accountant concerned did not report. And I think it is my bounden duty to at least apprise my members as to the scope. I mean, there used to be clause 27, if you remember, in the old form 3CD, whereby a chartered accountant as a tax auditor was required to determine as to on which amount the tax was to be deducted, but not deducted. Now, there was some payment under section 194J on which the tax was required to be deducted, but then it was not deducted. And therefore, the issue became relevant and it was reported by the income tax officer to the disciplinary committee or to the institute by way of complaint. The disciplinary proceeding was started. Now, before the disciplinary committee, it appears by reading that order, the appeal order, the chartered accountant gave the reply, sir, for the purpose of section 40 small AIA. Now, the issue was of non-deduction of tax under section 194J. Now, he tried to give reply that under section 40 AIA, at that time, since there was a decision of Maryland Shipping Corporation Special Bench, Visakhapatnam, which interpreted the language of section 40 AIA, because the term which was appearing in section 40 AIA, that amount must be payable as on 31st March, only then there was an obligation to deduct. And since in that case, as on 31st March, no amount was outstanding, therefore he was not required to deduct. But then that chartered accountant, it appears from that order, tried to mix two issues, 40 IA and 194J non-deduction. But then, and in order to defend himself as to why did he not deduct tax under section 194J, he tried to go in a roundabout manner and then tried to take assistance of section 40 AIA, and now which was wholly untenable. But then the disciplinary committee, it appears, now has gone on 40 AIA and then said that in case he wanted to rely some decision, then it was his bounden duty to have made reference in his audit report as to on which decision he is relying upon. And then disciplinary committee held him guilty. Now he appealed before the appellate tribunal. The appellate tribunal in its decision has very rightly said that the only issue before the disciplinary committee was on the non-deductibility or the deductibility of tax at source and non-reporting of that amount in clause 27 of the tax audit report. But why this reference of section 40 AIA has been made by the institute, I mean, which was not even the question and which has got no bearing on the deductibility or non-deductibility, at least under section 194J under rule 27. And therefore the appellate tribunal in its decision has said that we are ignoring the observations of the disciplinary committee in respect of section 40 IA, and we are not giving any finding on that. But then, even if though that appellate tribunal has diluted the impact of the disciplinary committee's order, but then that shows the approach of the disciplinary committee, that even if you tend to take a particular view and that view has been approved by the courts, and when can the view be approved by the court? I just want to ask a question to myself. When the courts find that this view is the correct interpretation, only then. Otherwise, it is not as if that the courts will confirm any view irrespective of whether, I mean, that interpretation is possible and permissible within the parameters of law or not. No, it's not like this. So when the courts understand the law in a particular manner, then the law is like that. And when the law is like that, then where is the question? Where is the question of reporting that this view has been taken by this court and therefore I am not reporting? I mean, that was too much, because something which is a matter of record, I always say. Now, when the law is initiated by the court, it is always a matter of law. It is in public domain and everybody is expected to know. And whether somebody notes it, somebody writes it, somebody jots it, is of no consequence, is of no relevance, should not be of any consequence. But then, therefore, I mean, having regard to those kind of considerations, you may choose to report as the tax auditor, but then the due date, now which has found mention in clause 20 small b in the context of section 36(5)(a), even if may refer due date as per the explanations to mean the due date under the respective legislations of Provident ESI, but then the due date has been interpreted by the court, and these are the constitutional court. These are not any, I mean, the courts of my home. These are the constitutional courts. And when the courts interpret the due date, even in the light and even in the face of that expression used by the legislature to mean the due date, means the due date of filing of return, then why should there be any adjustment in the first place by now? So far as the reporting aspect is concerned, this is the choice of each individual tax auditor, depending upon, I mean, in what manner would you like to report? So this I just wanted to highlight. And in fact, I tell you, in Elom extrusion, the Supreme Court, though that decision was on section 43B, but then it was the batch matter. And in some of the batch matters, I had the privilege of addressing the court. And rather, I remember in my case, and that case, the name of that case, which was the batch matter in Elom extrusion, my case was the DTDC Korea. And in that case, not only the employer's contribution was there, but the employee's contribution was there. Since it was a batch matter, and therefore the employers and employees contributions kind of things have not come as clearly in that order of the Supreme Court. Otherwise, I mean, the courts by and large, because what is the rational justification of the courts to say? Courts say when their parent legislations, the Provident Fund Act and the ESI Act, they themselves allow the payment to be made, if made belatedly, I mean by levying certain penal consequence or penal interest or penal some penalty or damages, then Income Tax Act is going much steps ahead than even the parent legislations. So, having regard to the totality of the ecosystems and the rationale, the justification of the existence of such kind of a provision, the purport and object with which these kind of provisions come to be enacted in the statute, and by taking a purposive construction, the courts have relaxed the rigor of such kind of lopsided provisions of the act. I mean, then the law has to be understood in the light of as has been understood by the court, because I always say that the law is not only as to what is there under the Income Tax Act, but the law is not only what is there under the Income Tax Act as understood, enunciated, expounded by the courts. Because had everything written in the act been so legible, understandable, decipherable, then what was the need for the courts? So the need of the court was to interpret when the meaning of some expression, or the meaning or the interpretation of something was not explicit. Therefore, how can one be permitted to disregard? And something then which is the part of overall law, then to say that you ought to mention in your audit report, I mean, that is something which I, as a litigating lawyer, I mean, I could not fathom. Maybe, I mean, there may be compulsions. There may be compulsions on the part of those. Probably, I need not to go, I mean, that far. The next issue is that we have got section 45 subsection 2, and there is a clause 15. Section 45 subsection 2. Now, as a tax auditor, if my client for whom I am doing audit has converted its capital asset into stock in trade, then I am required to give certain information, and that information is description of asset, the date of conversion of that capital asset is stock in trade, the cost of acquisition of that capital asset, and then the fair market value as on the date of conversion. Because section 45 subsection 2, you would kindly recall, now it says that profit and gain arising from the conversion of a capital asset to stock in trade. Again, this is a fiction. Otherwise, if I convert my own asset into stock in trade, now there is no occasion of any transfer. Now this remains from one hand to another hand. But then section 2 clause 47, which defines transfer, now specifically says that such kind of a conversion will be equal to transfer. But okay, so if it was a transfer, then section 45 subsection 2 says that there will be profit and gain arising as a result of such conversion on the date of such conversion. And how the profit and gain then will have to be computed? Now the mechanism is that the fair market will cost, of your capital asset, fair market value that capital asset as on the date of conversion. Now that will be the deemed sale consideration. This deemed sale consideration and cost of acquisition, the difference will be, of course, after indexation with long term, will be the profit and gain that will be chargeable as capital gains. But then in which year? It will be taxed because section 45 subsection 2 says that it will be taxed in the year when your so converted stock in trade comes to be sold. So now in this year, your client has converted his capital asset into stock in trade, now which has not been sold in this year. Now what would you mention? Whether this information which you would give or you are expected to give in the present form, now if at all is going to serve any purpose, meaningful purpose or meaningful assistance to the income tax officer? Certainly no. Because unless that information is asked from you, whether that converted stock has been sold in this year, and if yes, then he would not be in a position to charge that capital gain to tax, because under section 45(2), the year in which that stock in trade will happen to be sold, that will be the year of taxability. But then that information is not being asked from the tax auditor. Now, many of my friends can say, sir, how does it matter? We as the chartered accountants, would report and whatever is asked. The question is not this. I'm not speaking on tax audit in that traditional fashion, a traditional manner. I am trying to raise, and after all, this form must subserve a realistic purpose to the government. And what is government? Government is the larger society. So unless this tax audit makes itself relevant, meaningful, useful for the society, this will disappear. This bounty, concession, obligations, responsibility given to chartered accountant, it will disappear one day. Or even if it may not disappear, it will be shared by other professionals also. As all of us know that this is an eyesore. This obligation or responsibility given to chartered accountants by the government is a serious and severe eyesore amongst the other professional bodies. Everybody is eyeing towards it, and therefore we must do all efforts to make it relevant. So this discussion which I am making is in that direction, to make Form 3CD relevant. So that clause is not there. Neither has it been asked in this clause that whether any capital asset which was converted in earlier years into stock, now whether has come to be sold in this year in which you are doing audit of your SSC. If yes, then kindly give these particulars. At least when that information will come, that will act as a trigger for the tax department to make a meaningful use of the information furnished by the tax auditor. Then if 45(2) is there, then a next pertinent question which comes, 45(2), when you convert your capital asset into stock in trade. But what if you convert your stock into the capital asset? Even that is also a situation. I am a real estate builder. Now that real estate which I develop is my inventory. Now out of such inventory, I choose to convert to some part of inventory as my office. I convert that inventory into the capital asset. Now even that is taxable. In case of 45 subsection 2, that will be taxable in the year of sale when the stock is sold. But in case of a conversion of stock into capital asset, now that conversion itself is taxable. Now you are converting your inventory into capital asset. No cash flow is coming. No cash flow is coming. When capital asset is converted into stock, stock is sold, cash flow comes. I can understand that I will pay tax out of that. But then if I convert my inventory into the capital asset, there is no cash flow resulting. But then section 28, clause 6, Roman small a, now it says that it is taxable as a business income. The fair market value of that inventory, I mean, that will constitute the sale proceeds. It will be deemed to be sold. Though, I mean, it remains in one and the same hand. Only stock has become capital asset. But then the legislature says under section 28 clause 6a that it will be treated as sale. But then we are doing the audit of business. Now something which is the hardcore business income, maybe on conversion of inventory to stock, but then that does not find place in form 3CD. That does not find place in 3CD. This is something very, very atrocious, paradoxical, contradictory, inconsistent. Only 2 or 3 days back, the board has made some amendments in form 3CD. But then why, I always ask this question, why this form 3CD is not made responsive? Why is it not brought in sync with the changes which happen under the Income Tax Act? Now, even 2-3 days back, when 3CD now has come to be modified, certain more clauses have been inserted. Then why this was not inserted? So we, as the chartered accountants, even as the buddy Atul Mehrotra ji, I mean, is listening. Therefore, it becomes bounden duty for all of us put together at individual level and at institutional level to impress upon those who are responsible for making the entire system responsive and in sync with the changing times. Now, similarly, there is a reporting under clause 70, 50C and 43CA. There's a tax auditor. Now you see whether your client was holding some land or building as capital asset, or if your client was a real estate developer, was holding land and building not as a capital asset but the trading asset, now which has been transferred during this year, and if yes, whether the sale considerations received or accruing to him is less than the stamp duty value, and if yes, then as the tax auditor you must furnish this information on the golden platter in clause 17 of this tax audit report. Fair. Then if I ask a question which I asked a little while ago while discussing clause 15, 50C and 43CA can be there, but then why should not 50CA be there? 50CA says that if there is a transfer of an unquoted share at a price which is less than the fair market value, and the fair market value means the fair market value has to be computed under Rule 11 UA. Now, why is that step motherly treatment to an equally placed provision of law? That I have not been able to fathom. Now you can ask from the tax auditor to give report about the gift. You can ask from the tax auditor the report about the amount at which you have issued the shares. You can ask from the tax auditor to report as to whether there is any advance forfeited in respect of the transfer of an immovable property by your client. But then when you are asking the tax auditor to report on 50C and 43CA, then why not 50CA? Again, I mean, this question, I mean, again, on a macro level, that why should we not make this Form 3CD responsive and be brought in sync with the changing aspirations of society? And I tell you, and again, even at the cost of repetitions, I will say that this profession, unless would be needed by the society, I mean, would not have relevance, would not have, I mean, maybe, I mean, my expressions may be very harsh, may appear to be very harsh, but then we all will have to ensure and see that this profession remains relevant, remains useful, and of pertinence to the society as a whole. Only then we can command respect, we can command, because uh, because uh, unless that is made, no profession can survive. So 50C and 43C. But then kindly see what is asked. Details of property, fair. Consideration received or accrued, fair. And stamp duty value. Now, the moment you give this information, then what would happen? The CPC will be prompted, which is already very hyperactive, to make adjustment. Now, I am at loss to understand why this clause 17 has been made in such a manner which smacks of the insensitivity of the statutory right of the taxpayers, which is embedded in section itself. Section says, subsection 2 says that if an assessee objects to the assessing officer that the real fair market value is less than the stamp duty value, then he may request to the assessing officer to appoint district valuation officer, and then the district valuation officer will determine as to what is the fair market value. What would happen in case of an assessee at later stage, because it will be furnished on or before 31st October. Your case will be selected in scrutiny, say by 30th of September next year. And then at that time, you may choose to raise objection as to its real fair market value. But then by that time, the CPC, I mean, may be prompted to do for what it is known. So there is no answer as to why this clause 43C and 50C being made in this manner, because that statutory right was always there right from the day one when section 50C was enacted. 43CA came later. It is a replica of section 50C. But that right was always there. So when that right was always there, then why did the framers of this form, who framed these clauses on the strength of section 295 of the Income Tax Act, and when the rules are made, it may be a subordinate legislation, but then so long as they are within the four corners of law, that acquires the force of law. The next issue about the user of discretion by the tax auditor. There are several clauses in which the tax auditors are required to compute additions and the disallowances under particular sections which have been like 40AI, 14A, 3613, 43B, loan or deposit accepted under section 269 SS and 269T. I am a member of that WhatsApp group, I mean, which is there in Dehradun. So one day I had an occasion to see in that group one young lady member, I mean, asked about something about 269 SS and 269T. And one of my very good friend then happened to reply. Yes, that reply was perfectly in order. But then, was that the only answer? I'll come on that, because over reporting is the easiest thing. Therefore, that discretion which is there in any person, including in the auditors, and for which the call has to be taken by the tax auditor whether the discretion has to be exercised or not. Because whenever there is a discretion which is vested in any person, that is not an arbitrary discretion. The very word discretion now presupposes that the decision in a particular manner will have to be taken by consideration, by taking into account all relevant factors which are relevant, which are germane, by disregarding the irrelevant aspects, by taking a very judicious, fair, reasonable and conscientious view. The word discretion never means or is never intended to mean the arbitrary exercise of the discretion. So when there is a discretion which is vested in any person and the tax auditor, is not worse than any person, and then after exercising my discretion, if I tend to take a particular view, that view with which I can always stand by and with, that is a, because if tomorrow I am called upon as to why did you exercise your discretion in this manner, then am I in a position to defend my exercise of the discretion in that manner or not? That is the question. So if I will come, since I raised that issue of loan or deposit, therefore I'll start about the using of discretions. That is a subjective decision of a particular chartered accountant, or for that matter any chartered accountant, tax auditor, because somebody can say, Rakesh, this is you do not tax audit, therefore you can speak in all this. But then maybe I may speak in that sense because I do not do audit, but then I am giving, who am I? To tell as to in which manner something has to be reported, not to be reported. But then I am giving the dimensions for all of you, for all of my friends to think and ponder. That's all. The objective of this discussion. I am too small a person, much less in the field of audit. And that too before such august and illustrious gathering of the seasoned professionals, now who are well informed, even know much more, at least in the field of auditing. Then what I know, what can I tell? The objective is to stir the mind and food for thought. That is the objective. So now let us see clause 31. Maybe it may be aggressive user of discretion. Now section 31 small a. Now it says particulars of each loan or deposit in an amount exceeding the limit is specified in section 269 SS taken or accepted. So 269 SS refers to for the purpose of only limit or for the purpose of even loan or deposit also. Naturally. Now when in this clause section 269 SS is referred, that means that in turn it refers to the loan or deposit as referred in section 269 SS. And in section 269 SS, the loan or deposit which is referred obviously would mean the loan or deposit beyond a particular threshold, particular limit. So now when loan or deposit as referred in section 269 SS, so therefore now if loan or deposit now which has come to be defined in section 269 SS under the explanation that loan or deposit means the loan or deposit of money. Many of you would recollect the loan or deposit which has been defined in section 269 SS is loan or deposit means the loan or deposit of money. Now somebody can say on what kind of a definition, but then the legislature when seeks to define in certain situations, certain terminologies, then such kind of definitions are not something which are alien. We all know. But then the courts have given, after all, any expression which is on the face of it narrow, rather that requires the long interpretations, because that narrow expression is capable of being interpreted in more than one way. Therefore, we need the authoritative pronouncement of the court. And the courts have said loan or deposit of money would not include if the loan or deposit has been received or accepted by way of book adjustment. Not one, not two, plethoras of judicial decisions. So if this clause 31 small a says the particulars of each loan or deposit and referred under section 268 SS, and if somebody taking this kind of an aggressive interpretation, I would not say even aggressive, because this interpretation is based on not one but many judicial decisions, including the constitutional courts, several high courts. Therefore, I would be committing a sacrilegious act if I say it an aggressive interpretation. That is the interpretation. Who am I to say that the interpretations taken by the courts is aggressive? No, I just wanted to say that by relying upon such interpretations, if a tax auditor, when confronted to a situation whereby his client has accepted the loan or deposit through book adjustment, what fault can be found? I am at loss to understand. Similarly, if you see clause 31C, particulars of each repayment of loan or deposit in an amount exceeding the limit is specified in section 269T. I mean, the same thing. 269T refers to loan or deposits repayment. Obviously, loan or deposit, unless it is a loan or deposit beyond a particular limit as referred in section 269T, that would not have been referred in 269T. Therefore, this clause refers to the repayment of any loan or deposit beyond a particular amount, the repayment of which is taking place. Therefore, if while doing the audit of a company SSE, now if I find that this repayment of this loan or deposit is not the repayment of that loan or deposit which is so defined under section 269T, because I do not know how many of us are conscious that section 269 SS defines loan or deposit in a different manner than section 269T, which defines loan or deposit in different manner, at least for the company assets. Now it says loan or deposit in case of a company means a loan or deposit which is repayable after a notice or which is repayable after a period. Kindly mind the expressions. In case of a company SSE, in case of other SSE, loan or deposit even for 269T means the loan or deposit of money. But in case of a company SSE, the loan or deposit means the loan or deposit which is repayable after a notice. Kindly mind the expression, repayable after a notice or repayable after a period. So if it is not a fixed period loan or deposit, then it will not be loan or deposit for the purpose of section 269T. If it is not repayable after notice, then also it will not be loan or deposit for the purpose of section 269T. Therefore, one can ask, I mean, what kind of a loan or deposit is then contemplated to be outside the sweep of section 269T? Yes, the demand loan or demand deposit. When that amount is repayable at once, the moment one asks for it. I mean, this demand loan is not something which is never heard of. It's not something which is heard of. I mean, it is demand loan. So if in case of a company SSE, if that loan or deposit is not repayable after a notice, and then if such kind of a loan or deposit which is paid otherwise then by an account pay check or bank draft, irrespective of the amount of this kind of a loan or deposit, then how can that be brought within the sweep of section 269 in case of a company SSE? And if, as the tax auditor, now if I take a call that I am required to report only that loan or deposits repayment which is so contemplated in section 269T. Now here the main provision itself, you forget about the codes. The main provision now itself says that not every loan or deposit is a loan or deposit for the purpose of section 269T in case of a company. Then what fault can be found or ascribed or imputed or attached to the tax auditor? Something which needs to be. I'm not saying, I mean, as to what Vimal has to do, what Rakesh Gupta has to do, what Kamal Juneja has to do, or what Rajesh Gupta for that matter has to do. I mean, this is a subjective decision depending upon the risk appetite of every individual which one has to take a call. But then I am showing you the dimensions, I mean, which can be there. (14A). I am required to report 14A. 14A, amount of an expenditure which has been incurred in relation to the income which does not form part of total income. I mean, that cannot be allowed. That is what section 14A says. So as a tax auditor, I have to find now which is the expenditure which can be said to be incurred in relation to earn a tax exempt income. I'll have to find as the tax auditor. If I could not find, I could find the exempt income, then I may be persuaded to approach Rule 8D. But then hold back. As the tax auditor, now am I aware about such a position of law that even if there is an expenditure now which was incurred for the purpose of making investment, which if yielded income would have been exempt, but then the fact of the matter, it has not yielded any income which was exempt. Because Rule 8D, if you read 14A, Rule 8D, now it says whether there is any income or not income. But then the courts have given the tongue to this expression that unless there is an exempt income, there is no disallowance. No disallowance can be made. Only that investment which actually yields tax exempt income is relevant even for the purpose of computing 1% of the average investment to arrive at the disallowance under Rule 8D2. So if I may have nowadays, dividend for assessment year 2021, I mean, it was by and large exempt up to SS. So if I may have made investments of 100 crores in the shares of some company. If you go strictly by the letter of law as per Rule 8D, then you will end up in making disallowance of substantial amount of expenditure, because Rule 8D does not make any distinction whether the income is there, exempt income is there or not there. But then you will have to fall back on the law which has been so understood by the court, and the courts have said not once, not twice, not thrice, but several courts several times that unless there is an exempt income, there will not be any disallowance under section 14 capital. So if as the tax auditor, being part of the citizenry of this country, bound by the rules, regulations, including the constitutional provisions, now is not bound by the ruling and the dictum of the constitutional courts, why not? So if I as the tax auditor tend to exercise my discretion, and discretion is based, it's not in the air. Nobody can be heard saying that your discretion is neither here nor there, but it is just in the air. No, nobody can be heard saying it is here, it is very much there, and certainly it is not in the air. As a tax auditor, you have to take a call. (43)B, there is a clause 27, 26. Again, I mean, quite contentious. A razor thin, at least in 43B, I would say, a razor thin scope for ambivalence. It says, in respect of any sum referred to in clause A, B, C, D, E, F, or G of section 43B, the liability for which, in respect of any sum referred in 43B, and I one may tend to take tax duty or cess, employer's contribution, interest to financial institutions, interest to bank. Then somebody may see that sum, somebody may see that which is that sum as referred in 43B, A, B, C, and D. There's one aspect which I said earlier, the sum, tax duty or cess. But then somebody can view that sum as referred in section 43B, A, B, C, D, E. What? Sum in respect of which the deduction is otherwise allowable. That is what section 43B starts. Section 43B starts, notwithstanding anything contained in any other provisions of this act, a deduction otherwise allowable under this act in respect of A, any sum payable, B, any sum payable, C, any sum referred. So, sum, which sum? There is another way to look at it. Sum in respect of which the deduction is otherwise allowable. And therefore, if in respect of the tax duty or cess, I am not claiming any deduction, or the deduction is otherwise not allowable, since I have not claimed any deduction on account of the tax duty or cess, and therefore this amount, if at all, can be called as a sum referred in section 43B. Now that is a question, though again I would say with respect to this clause of section 43B, now there may be a different take, but this aspect, this facet, I just wanted to highlight. The next is 40 small b. Now there is a clause 40 small b. Now it says that if you are paying remuneration, salary, bonus, commission, or interest to the partners or the members of LLP, then beyond a particular amount it will not be allowed, or in case of interest, beyond a particular rate of interest per annum it will not be allowed, that is 12%. But then the book profit has to be computed, or for that matter, like interest on capital not exceeding 12%. But then the capital, now which capital? As the tax auditor, if that capital which has been built by the partners, the partnership firm, by not providing the depreciation in the books of account, if the depreciation is not put in the books of account, obviously there will be the larger amount of profits. And when there will be larger amount of profits, and that profits will be apportioned to the partners, there will be larger amount of capital, and that capital, 12% of that capital will mean the larger amount of deductions on account of interest. But then can anybody say, no, we will allow you, first of all, we will put depreciation in the books, we will compress and depress the profit, and such a depressed profit will then be apportioned to the partners, and then interest liability or interest deduction will be calculated, and this excess interest then you should report as a tax. No. So if as tax auditor I am aware, as the tax auditor, if I am aware that such kind of a working is alien in section 40 small b, at least for the purpose of computing capital in the matter of the allowance of interest, then And if I choose to exercise the discretion in not reporting, because according to me, as per the judicial decisions, this kind of an exercise cannot be done by the assessing officer notionally. Similarly, in the matter of the book profit, because remuneration, cannot be beyond a particular percentage of the book profit. That is given in 40B. First 3 lakh, or what is that amount, 90%, then thereafter 60%. There is a limit which has been given in 40 small b. Now book profit, therefore book profit, now book profit has been defined. Book profit has been defined to mean the net profit as shown in the profit and loss account, computed in the manner as laid down in chapter 4D of the Income Tax Act. 4D means section 28 to 44 DB of the Income Tax Act. So if book profit has been so defined, in which the brought forward losses will not be adjusted, because section 28 to 44 DB means the profit has to be computed in this manner.
क्या कहता है? अरे आइए का नंबर बोल यार, मैं बोलता हूँ पहले बोल यार, नंबर बोलिए.
Yes. Hello. Am I audible, Vimal?
Yes, sir. Yes, sir. Yes, sir.
Okay, thank you. The next is 40A3. Now, 40A3, again, tax auditor, you have to compute the disallowance. Any amount exceeding 10,000 in aggregate paid to a person in a day, against which you are claiming deductions against your business or professional income, will not be allowed. That is what section 40A3 says. But then section 40A3 is understood by the courts even after the omission of clause J from rule 6DD. Series of decisions. Harshila Choradia from Rajasthan High Court, Anupam Telelinks from Gujarat High Court, Delhi benches of the tribunal, to some of which I myself have been party, that if the identity of the payee is established, the genuineness of the transaction, is not in doubt. Because the object and the purport of the introduction of section 40A3 on the statute was to prevent the fictitious claim of the expenditure and such expenditures which used to be shown to have been incurred in cash, where the destination, the ultimate destination of lending that cash payment, could not be deciphered, discovered by the tax department. That was the purpose. In 1968, on 6th July 1968, circular number 6P, in which this purport and object of the introduction of section 40A3, was, and it was said that it is an anti-tax avoidance measure. And therefore, the courts have said that if you interpret the anti-tax avoidance measure then to interpret the anti-tax avoidance measure by disregarding its purport and object with which this was enacted, now would or may amount to or may lead to the miscarriage of justice. So if you as the tax auditor choose to rely upon the judicial decisions while taking a decisions to report or not to report, and according to me that is a discretion, because this discretion is based on the relevant considerations. It is not based on my women fancy. This user of discretion, is or cannot be termed as the exercise in a capricious manner. It is based on cogent reasons. (3613). Any interest on the borrowed fund, now which has not been used for the purpose of business, will not be allowed. That is what section 3613. And there is one explanation also. So if your SSE for whom you are doing audit has borrowed funds on which it has paid interest, that interest is sought to be claimed by him as a deduction against the business or professional income. But then those funds have been diverted for non-business use. But then as the tax auditor, now are you not entitled to see that these funds which have been claimed by anybody to be diverted for non-business purpose, whether they were borrowed funds or they were my own funds? So if I have paid any amount from my overdraft account, then the first impression goes, because the overdraft itself is a borrowed fund. So the first impression goes as if I have diverted the borrowed funds. But then overdraft account, I mean, cannot be in a mechanical manner or in a blanket fashion be called as the borrowed fund simpliciter, because overdraft account or the cash credit account is the account in which are deposited the checks and the payments and the sale proceeds received from my customers, and therefore it partakes the character of a mixed bag, a common kitty. And the courts have said that when there is a common kitty or the payment made from a common kitty or from the mixed bag of funds, then there is no such presumption that the amount which has been so paid is out of the borrowed funds. And therefore, as a tax auditor, after finding the payment having been made from such kind of an overdraft account, now comes to a conclusion, and that conclusion is not in the air, it is based on the judicial decisions, that it is not out of the borrowed funds, it cannot be assumed to be out of the borrowed funds, and therefore there is no question of any disallowance of interest. And if as the tax auditor, now you take such kind of a well-informed and a conscious and a judicially backed up call, then who can find fault? And whosoever tries to find fault ultimately will fall, because you have got a basis. (40AIA), any or 30% of such payment on which the tax was required to be deducted was either not deducted, or after deduction has not been made over to the government treasury on or before the due date of filing of return, now will not be allowed. That is what section 40IA says. But then if you as the tax auditor have been able to prevail upon your client, whereby and by which your client has been able to procure a certificate from the pay in terms of that rule, and on that basis, now then thereafter you are not required to report. Or if some amount of deduction has been made under that head against that payment, may not be full, but then, I mean, there is no question of disallowance. That is what the Calcutta High Court in SK Tikriwal says. And then if you take a call, a judicious call based on relevant and the judicial considerations backed up by the constitutional court's edict and verdict, then what blame can be fastened at your door? 37. Personal expense. What is personal in case of a company SSE? An artificial juristic person. It is a person, but then it doesn't have the mind and soul like you. It acts through the other human agencies who are called the directors. It may be a person, but then at the end of the day or at the beginning of the day, it is a juristic person. It is an artificial juridical person. And when it is an artificial juridical person, then there can be no personal expense. Personal expense can be of a living person. So in case of a company, an expenditure may be a non-business expenditure, but then that cannot be called a personal expense. You are called upon to report personal expense. 253 ITR 749. Gujarat said for the first time, and even much before Gujarat, several decisions. But then as a tax auditor, I am required to hone my skills. And that skill in any case is required. I may not be the tax auditor, but then if I am a tax consultant, then also I am required to hone my skill. Then also I am required to keep myself abreast as to what is happening. The law is a dynamic concept. It keeps on evolving with passage of time, with the experience with the legislature gains, and as understood by the courts. Address under clause 2. Somebody can say, what is so big? Whatever is the address, as the tax auditor, I don't have any option. No, I'm not saying that you explore the possibility of reporting something which is not the address of that client. I'm not saying. But then what I'm saying that when I report or I choose not to report, whether I do report or I choose not to report, I must be conscious of certain things. So in the matter of address, I must be aware that it becomes a business address. And of course, all business places are amenable to be surveyed under section 133 capital A. And so once something is there as an address on the tax audit report, obviously that is a place of business. Under section 133 capital A, I mean all place of business carried on by a person are amenable, are susceptible, may be surveyed. So to that extent, if you as a tax auditor are aware or not, my objective is, I mean, to give the dimensions for you to think. That's all. The clause under which you are doing audit under section 44 AB. Now 44 AB. My senior Juneja sir is there. He would vouch and remember that in 1984, when section 44 AB was brought, it consisted merely two clauses, A and B. If you are carrying on business, having turnover more than 40 lakhs, B, carrying on profession, having gross receipts more than 10 lakhs. Then came the era of presumptive scheme of taxations. That if you want to go in for the simplified scheme of the taxation, pay this much of tax on your presumed income. You be at ease and you allow us to be at ease. But then if you do not want the presumptive scheme of taxation, then you'll have to maintain books of account and then you have to get them audited. And that is how 44 AB is now not with only two clauses, but then clause C, D, and E also there. 44 A, clause C, 44 ADA, clause D, and 44 AD, clause E. So, am I aware as the tax auditor that this audit is being done under which clause of section 44 AB? There are several variants, and on this presumptive scheme, I mean, there can be a separate session for 2 hours. Therefore, at this stage, I will leave it just by making reference to this as a tax auditor, under which clause, I mean, you are doing audit, because you are required under clause 8 to report it. Nature of business. My friend Mr. Roy from Calcutta, a very intelligent chap, though I did not have the privilege of meeting him, but then the things which he keeps on sending to me, the questions which he keeps on posing to me, I mean, that is always a challenge to me. And today he said, though I know, I mean, he knows, but then he has said, Rakesh ji, that speak on explanation to section 73 also. Because required business. Now somebody can say, I mean, what is so big about it? What is so big deal into it? Nature of business, whatever my client is doing, I mean, I am required to report. Yes, yes, of course. Whatever client is doing, you are required to report. You are obliged to report as it is, because as a chartered accountant, we are supposed to report the facts as they are. But my endeavor, my attempt is only to give several offshoots and the directions to which it is expected that we as the tax auditors, well-informed professionals, I mean, should be aware. And that is that if I am doing audit of a company, it may be a closely held company, or because explanation to section 73 does not make any distinction between the company on this parameter. So explanation to section 73 MIA, where is the tax auditor, which says that where the part of the business of a company consists in the purchase and sale of shares. Unless your main income is from house property, from other sources, from capital gain, or your main business is that of in the share dealing or granting of loans or advances or doing the banking. These are the exceptions. And most of the times these exceptions may not be there in your case or in the case of your client for whom you are doing audit. So any part of the business of a company consists in the purchase and sale of shares, and those shares may be the delivery based shares. If they are not delivery based shares, then obviously it automatically becomes the speculation. So the fiction is, when you are a company, any part of a business consists in the purchase and sale of shares, then to that extent this company shall be deemed to be carrying on speculation business insofar as it consists in the purchase and sale of shares. Meaning thereby that if there is a loss in purchase and sale of shares, but then it must be part of your business. And whether it is a part of your business or whether it is a part of an investment, the department's attempt would be to show, in case there is a loss, sir, it was part of your business. Your attempt may be to show that it was an investment and therefore it was a loss under that capital gain. In any case, even if there is a loss under that capital gain, then it cannot be set off. If it is a loss on account of the speculation, then also it cannot be set off against other income. Explanation to section 73, though it uses the expressions that where any part of your business consists in the purchase and sale of shares, but whether the derivatives are also shares. Derivatives under section 43 subsection 5 clause D is called business if there are certain conditions. They're online trading, they're serially numbered, I mean the contract notes and all. But the shares in explanation to section 73, now whether would consist a derivative or not, the judicial opinion is divided. The Delhi High Court says derivatives, since the derivatives underlying assets are shares, therefore derivatives also would be shares. Whereas Calcutta High Court says we have to see the law. Shares and derivatives have been considered distinctly under section 43 subsection 5, and therefore we should constitute derivatives other than shares, and therefore explanation to section 73 would not cover derivatives. As a tax auditor, even I am required under some later clause, almost at the end of that form 3 CD. Now whether, and what is that clause? I am required to report as the tax auditor anyway, I mean it's difficult for me to find. That is what is called the lack of revision. Like in chartered accountancy, I do remember. Now, even if you may have studied for 3 years, but even a day before the exam, if you don't study, then there is a significant amount of erosion. I mean, the same thing has happened with me today. I mean, because of very heavy matters listed for virtual hearing, and I could not. But then, I mean, my objective is not to speak, in those manner, and because of which I may have disappointed my very many chartered accountant friends also. Then, for that, you can invite anybody else also. Who are much more informed and exposed than me. But I have got my own style. I have got my own way of expressions. Not on micro aspects, macro. But then some dimensions may not be of use much about the tax audit, but then definitely, they may be of use. At least for those who are into the tax litigations, at least from the tax angles. And of course, the tax is an important angle in the tax audit. Now, there's one clause 9, and it says that you have to report the changes in the partners. But then, have you gone through before reporting the provision of section 187 and 188 of the income tax? Because 187 says that in these situations, even if there are changes of the partners, then it will be merely a change in constitution and the old firm will be treated to have continued. But in certain situations, it will not be treated as change in constitution. It will be treated as succession of the firm. There may well be a situation whereby 2 partners retire, 10 come, and on the face of it, it would look the whole of the composition of the firm has changed. But then section 187 says that if at least one partner before the change and after the change remains as a partner, then that old partnership firm will be treated to be continued. But then if a firm is dissolved on account of a death, there were 8 partners, 1 partner dies, and because of that firm gets dissolved, the 7 remaining partners may choose to continue that partnership firm. Then also section 188 says that it will be a change in constitution of a firm. It will not be that old firm. And if it is an old firm, there are different consequences. If it is an altogether a new entity, then there are different consequences. But then as the tax auditor, my objective is, have you gone through section 187 and 188 and then have analyzed that change? Because you are required to report under this clause whether the change in partners have taken place, and if yes, or in their profit and loss sharing ratio. If yes, then you have to report. I'm not saying that you have not to, you have to report. But then what I am on it, whether you have factored the impact and import of section 187 and 188. And lastly, I will take, and then I will take questions. Now, are some clause requirements require unrealistically the tax auditor to predict the future? So this form 3CD requires the tax auditor to be the astrologer also. There is clause 30 capital A. Now you see clause 30 capital A. 3C, where 3CD has gone. capital A regarding the transfer pricing cases, whether primary adjustment has been made or not. If it has been made, then what about the secondary adjustment? Now, whether the amount which is involved on account of the secondary adjustment, whether has been brought in India or not. Though for making secondary adjustment or the excess money to be brought in India on account of the primary adjustment, there is a time limit, and time limit goes well past the tax audit report. Now, when the time limit for ensuring a particular thing goes well past the doing of tax audit, then how can the tax audit on or before 31st October, and we say or anticipate, he doesn't have any extra sensory perception or any futuristic skill to visualize, to anticipate, oh, what would happen after 6 months or 3 months? That clause 30 capital A. Now, clause B requires some information from the tax auditor which is incapable of being given. So in that sense, when I framed this question, I said that whether the tax audit report format, some clause requires the tax auditor to predict the future. So friends, now with this, I will end my this deliberations. I'll request where Vimal has gone to come and surface and resurface on the horizon, and let us see the questions if there are any. Maybe
Any
my
questions?
audience, may have spared me by showing some amount of pity on me, but then if it is there, then I'll take them up to the best of my ability. Yes.
Thank you, sir. Questions from the audience, if there are any, may please be asked.
Okay, they are very much considerate.
No, but I have a couple of questions. If you permit me, then I can.
No.
please,
Okay, your questions. Okay, I will. So there may be two reasons for the absence of questions. Either my audience has understood, this deliberations well, therefore I have not left any question which could have been there unanswered, or I may have spoken wide off the mark, and therefore it could not ignite the questions. Anyway, yes. What are the questions, Vimal? Your questions?
In fact, I can see there is one question which says, sir, kindly clarify section 269 ST. So identity of is basically a machine. So would you like to take it up, sir, or should we ask the queries to be a bit more specific on what actually 269 ST?
Yes, he wants some reporting aspect of the matter, or he wants to understand, the provision as such. Name has not been referred from Dell to everybody. Yeah. Okay, but then you kindly ask a question. 216 ST, I believe the first assumption holds good, Dr. Gupta. Samandeep Wadhwa. What was that first? I forgot, Samandeep, sir. I hope. Samandeep is from Dehradun or from somewhere else?
Okay, meanwhile, sir, may I ask my question?
Please.
So basically, with respect to the time of deposit of employee contribution as per the Act, it is very clearly explained by you that as held by various high courts, the time is basically from with respect to the time of filing of return as prescribed in the Income Tax Act. So in the form we have to specify, so we have two options. Either we take this call based on the judicial pronouncements and we write that the date of deposit is, let's say, 30th of October 2020. And then in that case, so far as the CPC is concerned, probably CPC will not make any adjustment because most of the time it would be probably machine processing. Supposing the auditor takes a call that he will use the dates pertaining to the respective statute. So if under PF Act it is 15th, he specifies 15th. As a result, there is an automatic adjustment made by CPC and we get an intimation which says that this is the liability. But since it is contrary to the established judicial pronouncements, so is there any way by which, other than filing an appeal, or how should we proceed in such a situation?
Why do you feel shy in filing appeal? Now, if one is hit by a car, then can somebody say, I need not to go to hospital? If and this is a system, we are part of system. If some injury, which I feel it as an injury caused by a quasi-judicial authority, now even that machine is also quasi-judicial authority, because even that has also been given or designated as the assessing officer. So the remedy is by way of an appeal. And also you may go in for, also, I'm not saying in substitution of appeal, you may take reports to 154, the possibility of which is very remote. But then don't wait your 154 to be disposed and then you go to file appeal. That always I say that if you have got, say, more than one remedy, the earliest remedy must be preferred, and that remedy which can be taken up later on, that can be taken later on, or that may be taken early, but then the time bound jobs which have to be done, time-bound obligations which have to be done, that must be fulfilled.
So then we should definitely file an appeal in such cases,
Yes.
and then
Yes.
contest
No.
them on merit.
Yes, next please.
There's another question related to, in fact, 269 ST only. We are yet to receive further clarification from our queries. But meanwhile, 269 ST talks about specified sums, if I'm not wrong. And those specified sums are...
No, it doesn't say specified sum. It says no person shall receive an amount of is 2 lakhs or more in aggregate from a person in a day or in respect of a single transaction or in respect of a transaction relating to one event or occasion. So, I mean, Mr. Dell, I would call him like this, that he wants to know as to what is the meaning of the word event. There is a principle of rule of adjustem generis. Now it says that the meaning of the word, though here the meaning of the word is quite clear, but then yet if you want to be more clear, then the meaning of the word in whose company that word is, now that will give a clue. As a man is known by his company, I am known to be in a very good company when I am with Kamal Juneja ji. So when event or occasion, so any event, because then you'll have to go on the dictionary meaning, the common parlance meaning. So any event or occasion, now event, if you read the dictionary meaning, you will find, I mean, there is nothing, I mean, so critical in the word event. If you can illustrate with the help of some example, then maybe I may be able to, I mean, throw some light on that. Otherwise, according to me, you will have to go by the rule of literal construction. You have to refer to the dictionary meaning of the word event.
So basically, my query is, I may be faltering on the sections, and I don't unfortunately have access to the act right now. The query, sir, is that if somebody receives as part of the sale consideration of an immovable property at the time of execution of the sale deed. So I'm executing the sale deed today, and I'm receiving a consideration, let's say of rupees 10 lakhs in cash. And the amount is mentioned in the sale deed also that this is part of the consideration. I have received it and I have deposited it in my bank. And for some reason, maybe means to be explored, that why it was received in cash. But it is not an advance payment. It is simultaneously with the execution at the time of execution of the sale deed. Then will this also be covered by the provisions of this particular section?
No, amount received either by way of advance or otherwise in connection with the transfer of immovable property is covered by section 269SS, not under section 269T. Now it is a misconception that 269SS only covers the receipt by way of an advance. It's not like this. So when something which is covered under section 269SS, there is a specific exclusion under section 269ST. So there the consequence is there under in the form of a penalty under section 271D.
Okay. There is another query I can read out. Sir, in case of a person is both tax auditor and GST auditor, and in GST audit some tax liability arises by the department which has not been shown in 40A, what will be the scenario?
No, tax liability arises which is
Under
not
GST audit.
So tax liability arises by department which has not been shown in 40A IA. Now, whether you have claimed any deduction in your books of account on account of that, but then 40A IA doesn't speak of any these kind of tax like 40A I or 40A IA speaks of some, probably you seek to say 43B.
Yes.
But
so this is what I feel, sir.
Because 40A, I mean, is not requiring you to report as the tax auditor about the tax liability.
Yeah, he has corrected himself, sir. He says 43B.
So what 43B? Okay, Saurabh. So in 43B, now I have suggested obliquely, even to this extent, that even if there is actual sales tax, but then which has not been routed through the profit and loss account, then also it cannot be said that this is a sum referred in section 43B in respect of which the deduction is otherwise allowable. So, I mean, you have to read between the lines. But then in the facts of your case, that if some additional liability surfaces as a result of GST audit, then definitely 43 reporting, so far as reporting is concerned, there may not be any consequence in reporting. But then, there may be, some issue in assessment. That is a different matter.
Then there is a question. Is it compulsory to report all ICDS clauses under section 145(2) in the tax audit report, sir?
Whether any adjustment is required to be made to the profit and loss for complying with the provisions of income computation and disclosure standards notified under section 145(2). This is clause number 13 small d. So if any adjustment is required, you'll have to say yes or no. And then if answer is yes, then details of such adjustments. So only those, will have to be reported where some adjustment is required to be made. Only those ICDS, reporting will have to be done. When the profit or the transaction value shown by you and the transaction value as per the income computation disclosure standard is the same, then no adjustment is required. Then, to that extent, you are not required to show. Yes. I think.
Any further question that any of the participants would like to ask? It's a very good opportunity. We have the expertise of Dr. Saab available to us. Juneja sir is, I can see him, he has just appeared on the video. Would you like to say anything, Juneja sir? You can unmute yourself. Sir, unmute you. Juneja sir, please unmute yourself.
Yes, sir. Sir, good morning. Good evening, sir.
Good evening, sir.
Sir, Mr. Gupta has given such a grateful thoughts, and we don't think there's anything left to be answered, put a question before him. He's an authority.
Thank you, sir. Thank you, sir.
And he's always available to everybody.
I'm humbled, sir. I'm humbled, sir.
So thank you, sir. To formally give a vote of thanks, I'll request our secretary of our branch, CA Rajesh Gupta ji, to propose a formal vote of thanks.
Thank you, sir. Thank you, sir. Sir, first of all, before giving vote of thanks, I would say, sir, the deliberation was, I don't have words to explain, sir. Basically, we have heard so many speakers when they start by the clauses from 1, 2, 3, 4, 5, 6, and then go till the end. But the way, sir, you explained the intricacies of 3CD, I think I've never heard before. So, sir,
Thank you.
I am blessed with the deliberation that you have given, sir. I've noted down certain things in my diary, and I'll keep it for future reference, and I'll definitely look into that also, because you have raised so many questions.
If you permit me, Vimal.
Yes, sir.
I had thought, but then I forgot. I had a very good friend, Mr. Amar Mittal, in Delhi.
Okay.
And he used to listen my all webinars and gave me very affectionate compliments. On the first day when I spoke on tax audit, only yesterday I was seeing the comment which he sent me. He wrote, Rakeshji, I had been doing audit for last 35 years, but then I never thought to do audit from all these angles. And unfortunately, we lost him day before yesterday because of the corona. And I thought, and since I forgot, I am dedicating these deliberations to him from the core of my heart.
So nice. So nice.
So I just wanted to, dedicate it. I forgot it. I am dedicating this to him. Please carry on.
Yeah. Sir, so I've also noted down the aspects that you have raised, the queries that you have specifically raised with regard to certain aspects of 3CD. And sir, I don't have words to explain the way you explained each and every intricacy of that. So, sir, Rajesh Gupta,
I'm honored. I'm honored.
very much innermost corner of my heart. Thank you, sir. Thank you for your deliberation. Thank you for sparing your valuable time for us and enlightening us on various issues of tax audit under the Income Tax Act.
Dehradun is a homecoming for me. Dehradun is a homecoming for me.
We are waiting for the
We are
situation to
waiting.
get better, sir, and we would request you to please grace the.
Definitely.
So once we are over this, once we are through with this Corona period, sir, we would definitely request you to come over here and deliberate on various issues, whatever sir you deem fit. Because you are a dictionary of everything, sir. So whatever query you have, I think you will give the answer on that, sir.
I may add, sir, most of the speakers, they all come with their PowerPoint presentation and so many things. In your case, sir, it's always extempo. I have always seen that, sir. It's always extempo. It just comes out of your rich experience and the way of basically your deliberation only tells us how clear you have things in your mind.
Thank you.
Over to you, Rajesh ji.
Thank you, sir. Thank you, sir. So, thank you for deliberating and thank you for sparing your valuable time, sir.
Welcome, sir.
Further, thank the technical team, especially Harshit ji and Arvind ji, for their support in seamlessly holding these VCMs. I thank all the participants also for sparing their valuable
विमल
time.
जी इसका रिकॉर्डिंग भेज देना मुझे प्लीज है
Sure, sir. Sure. हम लोग अपनी रिकॉर्डिंग सब अपनी उस पे डालते हैं.
अच्छा
But we'll send it to you, sir. Sure.
Okay.
Thank you very much, sir.
Thank you, sir. Thank you, sir. Thank you.
Vimalji, thank you. Thank you, everybody.